Thanks for listening to Investor Insights, a behind-the-scenes look at investing with Fund That Flip. This series provides an insider's look at how our business works and answers your frequently asked questions so that you can make better investment decisions with your hard-earned capital. Now, our founder and CEO, Matt Rodak.
Welcome to this episode of Investor Insights. I'm Matt Rodak, founder and CEO of Fund That Flip. And on today's show, we have joining us Jon Andrews, our Senior Vice President of Business Development, and Scott Eilerman of our Underwriting Team Lead. Between the two of them, they've underwritten and originated well over 2,000 projects. So quite a bit of experience between these two in terms of looking at deals and getting them funded. And of particular interest today, we're going to be talking about a new project recently opened for investment in Edgewater, New Jersey, which is just over the Hudson River from New York City. And this project is a little bit different than our normal fix and flip or single family new build. So thought we'd have these guys on the show to just talk through what the deal is, what it's all about, and why we're excited to fund it. So with that, welcome to the show, guys. So Jon, let's start with you. Maybe just give us a little bit of background on the borrower and how they came to us and kind of what the overall story is here.
Sure, happy to do so, Matt. So they actually, funnily enough, they found us kind of via some of the other work we had done in the area. So they'd seen our signs before, and as you know, real estate tends to be a small world, especially in that Jersey City north and south market. It kind of immediately on the other side of the river. A lot of those operators tend to know each other, so they had heard of us and had never worked with us on a project. And as they got to the finish line of this one, and as you can tell from the photos, it's very near completion. They were looking for a reliable source of capital to kind of partner with them and get it across the finish line so they could get it stabilized. So they reached out to us, and we were able to kind of start the conversation and learn a little bit more about them and their business. Tremendous amount of experience actually overseas. They got their start in China and in Southeast Asia as a developer, and then they've been in New Jersey for the past several years doing townhome projects. A lot of new construction on both the condo, townhome, and apartment side. And so we were able to see some of those units and develop a level of comfort with their ability to execute it. And one of the things that was attractive, obviously, as we started to underwrite this one, was from an execution risk perspective, and also on a permitting and approval perspective. Some of those things that have been a little bit slower everywhere in the months since the pandemic started. We felt like a lot of that was off the table here, given how advanced they were in the actual construction of the units, and having passed some of those initial inspections, given where they were in the project. So it seemed like something that checked a lot of our boxes, and we were able to get it over to Scott and team to get a formal underwrite and move it forward as we develop the story a little further with the client.
Got it. So heard about us through kind of the network, came to us, and maybe let's just talk a little bit about the project. You mentioned that it's nearly complete, right? So for those of you listening at home, you can see the project and all the photos on the website. Jon, just give us a little bit about like what is it, right? What's it consisting of, and then maybe transition into like what's their plan for it once it's done.
Yeah, so I'll answer the plan part of it first, Matt. They have a plan A and a plan B. Their plan A is to bring it to stabilized and eligible for perm financing. And we did a little homework and believe that they're a great candidate to get that conventional bank loan. They've been able to secure that type of debt in the past, and represented that they've got the process started there as far as getting that perm financing in place, and they just need to get it stabilized. So that is their plan. Plan B, if needed, and this is one of the things that we considered, given some of the unique aspects in the market, especially around rentals, is they could sell the units individually. And we think it makes a lot of sense given that the project itself is some larger units, right? With more than your, typical kind of Manhattan style, 1 bedroom or studio. These are larger units, multiple bedrooms. And their thesis, when they originally bought the location and started this build, was that it would be couples, potentially maybe even a family moving from Manhattan, across the river in search of more space. So by the time that we got involved and took a look at this project, we felt like some of the market conditions that are in play right now actually were favorable to that thesis for for the borrower in this case is that there are people seeking more space, work from home, and things of that nature. So we feel like, in one sense, their thesis when they initially undertook the project made sense, and only more so, kind of given what's transpired here in recent months. So yeah, it was new construction, as you noted, Matt. You can flip through the photos there and see the units, parking option available there. So conducive to likely working professional, young couple, potentially a family, but a little bit more space than some of the higher density units maybe that you would see in Manhattan, or even some of the boroughs, on the other direction.
Yeah, so we'll get into a little bit more about what the property is here in a second. Maybe, John, before we flip it over to Scott, just talk to us a little bit more about, you mentioned their experience. So they've got some experience in Southeast Asia, and then done some deals in New Jersey. What else can we share with the group here, just in terms of, is there more than one guarantor on it? Is, how they look on paper from a liquidity perspective, other types of projects of like similar size projects maybe they've worked on that you can speak to?
Yeah. So there's, there were 1, 2, 3, I would say 4 or 5 projects that we looked at in the immediate vicinity of this one geographically that were similar, right? So townhomes, there was, 2 townhome projects. There was 2 multi-unit projects, and then some duplexes, all new construction, most of which was sold. But they had actually represented, when they came to us, that this was a smaller type of a project for them, and this was an offshoot of their kind of larger development business. So we were able to see some commercial properties that they worked on overseas, and really kind of cut their teeth in the construction business on much larger types of projects, both of the apartment unit variety and commercial buildings. And then, they were looking to get more capital put to work in the States as of a few years ago, and thought that their entry point on the smaller units made sense to them from the standpoint of just understanding the municipalities and what they could get done. So their intent is to grow in terms of the scope and size of projects they work on here. But what we have on the platform and available for investment is representative of what they've been doing in the U.S. And that's representative of a scaled down version of what they were working on overseas, when they got their start in the construction and development business.
Yep. So one of the things we like to look for is like kind experience, right? So when you're doing a larger project like this, obviously a lot more going on than a traditional fix and flip. So it sounds like we got pretty comfortable with their ability to tackle these scale and scope of projects, given their experience here in the States as well as overseas. Scott, I want to throw it to you, maybe in just at a general level. So what did when this came across your desk from John and the sales team? What kind of caught your eye in terms of what immediately you started to like about the project?
Yeah, I think the first thing that stuck out was it's almost complete, right? When we saw pictures of this thing, drywall's up, it's almost finished out. They really have to put in cabinets, finish some tile work, and get the appliances in there, and it's done, and it's ready to be marketed for rent, for sale, get a tenant in there or list it for sale. So that's really the first thing, especially on a project that's as construction intensive as this one was. Not a lot left to do in terms of dollars compared to the total budget. So
execution risk significantly lowered in terms of getting permits and going vertical and all of those things. In a lot of ways, it's new construction, but in a lot of ways, it's almost like a flip, right? Because we're just finishing it out with the cabinets and the final finishes.
Right. At this point, it's basically a relatively cosmetic flip.
Got it. So let's talk about the actual asset, right? So correct me if I'm wrong, but I think first floor, we've got some retail / commercial mixed use space. The next floor up, we've got some units that could be either residential units or commercial units, right? So they could be office spaces, or they could be, I think, 1-bedroom apartments, right? With fully fitted out kitchens, bathrooms, et cetera. And then above that, if I understand it correctly, we've got 2 4-bedroom units that kind of go vertical. Is that correct?
Yeah. So like you said, first floor is commercial space. It's going to be fitted for restaurant usage. And then the second floor is, like you said, kind of that office residential flex space. Could be a a small office or 1 bed, 1 bathroom apartment with a full kitchen. And then, like you said, the third floor, I think it's 2 3-story apartments, 4 beds, 4 baths, larger. I don't remember the exact square footage off the top of my head. Looks like they're 2,500 square feet, 2-car attached garage, off-street parking. So big thing in New Jersey, especially close to the city. And like Jon said earlier, kind of targeting those people trying to get a little bit more space, move outside of the city. And you get that with a 2,500 square foot apartment here.
Yeah. So I think that's one of the things we kind of liked about the submarket as well, right? Even COVID, no COVID, this building, I think, provides a nice option for people to still be close to the city, and particularly kind of in COVID market, right? Flexibility to spread out a little bit, have some space, have the car, have the off-street parking, things that we think will help either from a rental demand perspective or even a for sale demand perspective, if that's the direction they want to go. So talk to us a little bit about how you think about valuing this asset, right? Because we've got different types of real estate all in one building. How do you guys go about breaking down and ultimately coming up with, what do we think this thing's worth so that we can, set our loan to values and loan to costs appropriately?
Yeah, there's a few different ways we could go about it in this situation. It is a mixed use building, so we can pull comps that are also mixed use, kind of have that retail side of things and also the residential side of things. But also with this building, each unit is a condo more or less, so they could be sold individually. So we looked at it from that perspective too, comping out each individual unit, residential unit, to other condominium units in the area, to see what those would sell for if they were listed individually. And then the last thing is an income-based valuation. So figuring out what you can rent them for, what are the expenses associated with the property, and then backing into a valuation using a cap rate that is in the area that we're seeing in the area.
Got it. So from a comp perspective, right? So if we're doing a valuation, looking at comparables, how do you go about that in for this particular market, right? Were you guys able to come up with a pretty good comp set for these different types of functions within the building?
Yeah. So there's a lot of condos in the area. It kind of depends. This is more of a boutique kind of condo building, 4 units. A lot of buildings in that area are more high rise. So our comps kind of varied. There's also a lot of kind of townhomes in the area, which are also comparable, but it's not the perfect comparable, I'd say. But we were able to put together a comp set that is 4 to 5 comparables each for each of the respective unit types, where we felt comfortable with around that 500,000-ish, a little bit more valuation on the retail or the residential office flex spaces, and then $1.2 million on the residential triplexes.
Got it. And then the other piece of that is more of like a cash flow underwrite, right? You're looking at what do we think going rents are? So same kind of a question. You guys were able to come up with a pretty good comp set on what do these 1 bedrooms rent for? What does a retail space rent for? What does a 4 bedroom rent for? And more or less back into here's what the building could be worth based on someone would be willing to pay for this building based on the cash flow that it can generate through a cap rate exercise.
Right. Similar process with pulling comps for the for sale basis, finding the ones that are most like ours and what are they renting for, and putting that into kind of an income statement and then backing into it, like you said, with the cap rate.
Got it. So there's really 5 units. There's the retail, there's the 2 1 bedrooms, and there's the 2 4 units. So we effectively comp each of one of those out or do a cash flow exercise for each one of those individually, right? Looking at other comparable like properties. And we add all that up and we got to about a $5 million after renovated value, I think, for this project. We also got an appraisal on this. So what did we learn after we got the appraisal as it kind of compared to our internal number?
Yeah, the appraisal came back very, very close to what our internal number was, a little bit higher. I think in terms of the things that we learned, it provided a lot of kind of macroeconomic information for that area. One of the things that I think we saw on it that we noted in particular was the unemployment job claims are decreasing, because of COVID. So that's obviously a positive in our eyes, something that we want to see, as opposed to it continuing to increase. So,
yep. In the price point at this space too is kind of the at a level where folks have in the employment world have been a little less affected by kind of the changes of the COVID's caused and all this. Okay.
Yep.
Maybe last question, I'll throw it out to either one of you guys. So the project is it's close to being complete, right? A lot of the work's been done. It's drywalled out. They're progressing it, as we speak in terms of finishing it out. What's the expected timeline on this? We've got a 12-month term in order to kind of finish it out, to get it leased up, to get it refinanced. What's kind of the expectation right now in terms of term of the loan?
Yeah, I'll answer that, Matt. So they anticipate being finished with the finished work and being able to bring this thing to market here inside of 45 days from today. So it's the 8th. It's post Super Bowl Monday here, and a month and a half from now, they anticipate being able to take this to market, and then they're planning on somewhere in that 60 to 90 day range for full stabilization. At which point they'd like to exit our loan as quickly as possible, with the permanent financing. And, same kind of thing. I think if they take it to market and end up getting somebody that offers them something they can't refuse to buy a unit, they're incentivized to get out of our loan and into that stabilized kind of permanent, longer AM, lower price loan as quickly as possible. And then interacting with the borrower and their level of sophistication, I can assure you they're excited about getting into that longer term loan as quick as possible. So given that we anticipate they're finished up, they're telling us around 45 days. So even if we call it 60 to be conservative, we feel like there's a really strong path to them come springtime, being in market in spring, and some people are hopefully kind of, getting out and about weather-wise. Tends to be a time frame when people are looking, leases end and people move. And then the other thing is, with some of the progress around vaccinations and things of that nature, and some companies getting back into offices and things, that anybody who maybe had left or was working remotely or things like that needs to be back in geographic market for work. So we think the time frame really lines up nicely for what they're trying to accomplish and go to market. And they're adamant that by summertime, we'll be out of this thing and they'll return the capital and on to the next project. And so we're hopeful for that as well. We built the 12-month loan term in there as an overly cautious kind of mechanism to make sure that they had the proper time frame to get it stabilized and dispositioned, in the right way.
Yep. So we think it's going to be done and move-in ready, if you will, towards the end of March. It's also an important point here from a risk perspective, because as they're able to start to lease this up, property starts to generate cash flow. Cash flow can be used to continue to help service our loan and ultimately position the property for their goal, which is a refinance. So not a long time frame for getting it to that stabilized point, which is I think another positive here that I'm guessing we considered as we were looking at all this.
Yeah, that's right. That was part of the attractiveness. As I presented it to Scott and team, was we felt like the time frame would be pretty short. We felt like the time frame, that we consider the highest risk time frame, right, when people are going through demo or doing foundations or things like that, was well past. And so pretty quick time frame to having this thing finished out and getting it stabilized so that they can focus all of their efforts on the disposition.
Cool. Well, listen, guys, really appreciate you jumping on here and giving us some additional insights into what's going on with this project over in Edgewater, New Jersey. For those of you listening at home, if you're interested in learning more about this opportunity, head on over to fundthatflip.com, where again, you can see all the photos. You can check out the appraisal that we ordered on this project. And Scott referenced quite a bit of good data, I think, in that report around what's happening in this market, generally from a real estate as well as from an economic perspective. If it's something you'd like to get involved with, pretty easy to invest as it is always on the platform. So again, thank you guys for jumping on here and giving us a little bit more insight. Thank you all for listening. Happy investing. Matt at Fund That Flip signing off.